Hello everyone, welcome to OptionGig. This is your host Vivek, part-time option trader and full-time worker, husband and father. If you also want to generate consistent monthly income trading options while working in your regular day job, then join me in this journey. Hello traders, how are you doing? Thank you for tuning into OptionGig, and I am here to present you the summary of the previous week. I'm coming a day earlier because tomorrow is Super Bowl and 49ers is playing in. So we got a plans with friends and family to watch Super Bowl together. That's how it should be watched. And after that, dinner and the rest of the stuff. So I will not get any time to do it tomorrow, hence I'm doing it today on Saturday. I think technically it is actually Sunday because it is past midnight. So I will probably do it little quicker than usual. Like I said, it's past midnight and I would want to go quickly to bed and be ready for tomorrow's game. All right, so let's dive right into it and look at what happened last week. First, the top market headlines. The first one is Amazon stock. Wow. It is an $1,800 stock and it went up $200 plus. Amazon reported its earnings and it blew the expectations out the door. It was beyond what any analyst would have expected, and it showed up in the Amazon stock. Those who are shareholders of Amazon should be pretty happy with it. But unfortunately, that was the only good news of the past week. The earnings of some of the companies. Otherwise, the next one, coronavirus, it continues to rattle the stock market. The stock market normalized, showed some gains on 30th, but then on 31st, that is on Friday, it gave up all the gains and it closed sharply lower. The continued increase in the number of new cases and the deaths that's happening to because of coronavirus, it's really unsettling. And also WHO, World Health Organization, declared it as a global endemic because at the pace which it is spreading, it could become a big epidemic. Companies and investors were worried of the impact that this coronavirus would have on the global supply chain. Third thing I want to talk about is because the markets went down, as usual, bonds went up. So treasury bonds of 10 to 30 years of maturity rose higher and made some recent highs, and because of that their yields fell sharply. Fourth story of last week is there was an update from Federal Reserve Bank. Mr. Powell, Fed chairman, came and gave his speech. Nothing much interested in the speech that I could find. Fed has decided to keep the rates unchanged after reducing the rates a few times last year. Now they are in the mood to stabilize the rates. Beyond that, nothing much we could hear from Fed. They've also told that they will continue to monitor the repo operations and if required may inject a little more liquidity as they have been doing it since October 2019. And no surprises as usual. You could pick up their December update and maybe just change some numbers. So because of that, market also didn't react too much to Fed comments. So that was a quick market update, and let's look at the summary, how the broad market index or ETFs did. SPY closed, almost every broad market index closed lower. SPY, which is an ETF based on SPX index, closed almost half a percentage point lower. It opened at 323. 321.03 and closed at 321.73. Dow Jones Industrial Average closed almost 0.85% lower, opened the week at 284.85 and closed at 282.42. QQQ Nasdaq opened at 217.72 and closed at 219.07. Lastly, IWM, small and medium sector, opened at 162.85 and closed at 160.53. This was one of the indexes which closed sharply lower. It had a decline of 1.45%, and we have seen it that the IWM is generally little more volatile than the other broad market indexes, and that we saw the previous week also. All right, so in this volatile market, how did we do? Totally, I closed 16 trades last week, out of which 14 were profitable and 2 were the losing trades. And I also rolled out many of the other trades to March expiry. Because of that, you would see 35 new trades opened because I closed a lot of February trades and either rolled it out to March or I opened a new March trades. All right, let's, as always, now we get into the details. You would have noticed that I am not doing the thought of the week or the topic of the week section. Like I said, I just want to quickly get through these updates and provide you with the updates because tomorrow I won't be able to. So for today's session, I'm going to skip the thought for the day. But if you're interested, I had done a new episode of my podcast today, which is about the 3 questions that my stock investing could not answer, but I could get those answers from options. And that is why I got attracted towards option trading. So if you really want to go through those my thought process of what attracted me in option trading and why I got into option trading, please go to the podcast platform of your choice and search for OptionGig, and you can listen to that podcast, the latest episode number 18. Okay, continuing our weekly updates, these are the top 3 trades that we closed last week. The first one is the Baidu trade. It's a little interesting history behind it. So we opened the Baidu trade when we opened it initially on 1st of January. We collected $6.13 as a premium. We rolled it up. We rolled up the put from 125 to 130, and later on 29th, we rolled down the call from 145 to 140. By doing this, we had closed both the legs of our initial trade. We closed the put, we closed the call. So we were able to exit this trade at a profit of $392. But because we opened up the new puts and the call, so we have a new strangle on Baidu with a short put at 130 and a short call at 140. Short call is a covered call because I hold 100 Baidu shares on my account. Okay, but because we closed our original strangle, we were able to exit this trade at a profit of almost 16% return on capital in 26 days. All right, second trade I want to talk about is DocuSign. I was bullish on DocuSign, so we had sold a put on 6th of January at a strike price of $75, and we collected $3.20 as a premium. Now on 29th of January, Docu rose, and it gave us an opportunity to close the trade, and we'll wait to open up another trade on Docu for a little longer expiry. I just want to see how the market is behaving for next week. And excuse me, our return on capital was 10% within 23 days in the trade. Third thing I want to talk about is Square. So in a Square, I had opened up a put spread with a short strike at 70 and a long put at 60. It was a $10 wide spread. When I opened it, the stock was trading at $69.58, so little bit in the money, almost 42 cents in the money, but I was bullish on Square, and we collected really a fat premium of $3.43. And then I opened this trade on 22nd of January, and on 31st, Square was higher, and there are multiple reasons why I had closed it. Number one, its earnings is coming up on 26th, in next 4 weeks. The trade is profitable, and on 31st, because the market fell, so my overall delta of my portfolio was really higher than what I would like it to be, and I was looking ways to reduce my delta, means looking ways to reduce my risk, and by closing this I would have been able to reduce the risk. So why not? It's a profitable trade. It allows us to get out of the trade before IV starts to rise because of upcoming earnings, and it also serves the overall portfolio. So I closed this trade, pocketed a decent amount of money. It was almost 14% return on capital in 9 days. Why would I not take it? And hence we close this trade. All right, let's look at the trades where we did not make profits. The top 3 option trades where we did not make profit. The first one is AT&T. I had opened up a short put on AT&T on 21st because I wanted to acquire the stock. AT&T at that time was trading at $38.30, but instead of buying the stock, I sold a put so that it gives me little more room for error, and I can acquire the stock at a lower than the market price. On 30th, I closed the put because AT&T fell down, so I closed the put, bought back the put, and also bought the shares. So my effective cost of owning the shares is $37.47, because buying at 38, I got an initial premium of 53 cents. So my cost basis is $37.47. But since I had to close this trade and then I bought the shares, I registered $100 loss in this option trade. The second one was, for some reason the value is not there. This was $24 loss. My apologies. I don't know what happened, but it is a $24 loss on this particular the individual trade, but it had got multiple adjustments in it, and if I really look at it, all the adjustments, I exited this trade at a profit, but this individual one was at a 24 loss, so that's why I'm showing it here at a $24 loss. Since these were the only 2 trades that we closed on loss, there is no third trade that we need to talk about. All right, moving to the next session. What are the top 3 premium trades that we opened? All right, so as you will see, because the markets were sharply lower on 29th and 31st, I took an opportunity to open new trades because the IV, the implied volatility, was high. So top 3 trades all happened on 29th. The first one is an iron butterfly on SPY. SPY's implied volatility rank was close to 50. I think it's been ages since I saw the IVR of SPY at this level. So I did not want to miss that opportunity. So I opened up an iron fly centered at 328 and then went out almost $20 outside to purchase the cheap wings. Overall premium that we gathered in this one was $11.42, and I will close it when opportunity presents to me. I will close it at my profit target of around 25% of the max profit. Second one I want to talk about is very tight iron condor. I would rather say that it is an iron fly itself, because the stock was trading at $102.47 and I wanted to open up a neutral trade. So I opened up a very tight iron condor with a short put at 102 and a short call at 103, and then we bought cheap wings on either side. Overall premium collected is $3.25, $3.27. So that gives us a decent break-even points on this. Again, this is my initial starter trade. If XLV moves a lot, I will be able to place another trade or ladder onto this existing one to again recenter my trade or to widen my break even. Third one I want to talk about is again very tight iron condor similar to XLY, but we opened this tight iron condor in XLI, and the stock was trading at that time at $83.35. So we sold a put at 83, sold a call at 84, and then went out almost $10 on the call side and $6 on the call side and $10 on the put side to buy cheap wings. Overall premium collected was $3.16. Again, all these three, SPY, XLV, XLI, are our core tickers, and I always want to have positions in it. I did not have any positions for March for XLV and XLI, and that is why I opened the positions, because on 29th high implied volatility presented me with the best opportunity and I took advantage of it and opened this trade. So that brings me to the end of this update. Thank you for tuning in. I hope you like this update. If you have any questions, write it in the comment section if you're watching it on the YouTube, or if you're listening it on the podcast, feel free to drop a note at optiongig@gmail.com and I will be very happy to respond to you. I love getting questions from my listeners or from my friends and the students whom I coach. Well, thank you very much. Happy trading. Have a wonderful day. Bye-bye. Please note that all the information presented is purely for educational purposes and is not a financial or investment advice. I don't know you, you don't know me, so do yourself a favor and don't invest or trade solely based on what you hear.